Before I start off with those 5 specific things that the markets are watching out for, I want to start off with the point that the markets now increasingly, or the budget is increasingly becoming market neutral. Now, you would argue when you look at the next 3 charts that, hey, it is not so. But 2016, 2017, and 2018, all of these moves that have happened. So this is Nifty post-budget 2016, but hey, this was because there was a rebound post the week quarterly earnings, and after February, wherein the Nifty Sensex crashed about 6% and FIs pulled out 17,000 crores, the markets had collapsed so much that there was a bit of an uptick. Nothing to do with the budget. 2017, again, the rebound that you're seeing in the markets is post the correction that had happened on account of demonetization. So November, December, January, the markets had completely collapsed due to demonetization, and then there was a rebound that happened from around the budget date. Again, if you look at any statistic, the budget had largely nothing to do with it. You could argue that 2018 was a different year because the market corrected quite a bit after the budget. It had risen, it corrected, but this is the LTCG year. So you could argue that maybe the market had it back of its mind that there was LTCG that came in and therefore a lot of adjustments, etc., and therefore the market slipped. But the budget largely is largely becoming market neutral. So the 5 things, some of them not that important, but still laid out for you. And Ida, your thoughts out here. Point number 1, a lot of people saying that growth over the glide path is a more preferred option, and the markets, the equity markets at least, would digest any kind of slippage as long as the slippage is being done to spruce up growth. So Mark Mobius yesterday, of course, said, 5%. I don't mind 5% fiscal deficit.
I was really wishing I was on that conversation, you know.
Yeah, well, but so foreign investors and frankly, a lot of domestic fund managers have also
Mark
said.
a piece of your mind, is it?
Yeah, well, I thought it prudent not to do that. But yeah, so most people penciling in that some bit of fiscal slippage would be okay. The equity markets would digest it. Now, again, we'll get to that debate in a bit. But Ida was speaking about banks and what could happen. So 2 things that a lot of brokerage notes and a lot of people who've spoken to us have been speaking about. One, whether there'll be a roadmap for consolidation of PSU banks. Would that come about? I mean, it is small, likely positive for mid-sized and small-sized PSU banks because they don't have the strength to do what normal banks would do. Or part 3, and Ida would probably come in here as well, the step up in the recapitalization of the PSU banks. I mean, some amounts have been laid out, but the murmurs on the street are that maybe the numbers could be higher. So that is something that the market would be watching out for as well. So do watch out for this. You know, a lot of expectations around autos, but if indeed Arun Jaitley's tweet about how lower GST rates would curtail the strength of the government to incur normal expenditure, etc., the GST tinkering may not happen. But if they indeed speak something about the scrappage policy, then maybe, and Emeka, I would want your thoughts here, but maybe if they do something with the scrappage policy, then commercial vehicle makers could actually be in focus. And NBFCs, again, some intent to show that whether they can resolve this whole swamp that the NBFCs are in, the funding swamp, maybe that is something that could happen.